Good everyone, Les here from BG Trading. Hope you are well. Today is June 14th, 2023, and I'll be analyzing two stocks that is currently trading at technically discounted prices. Those stocks, one of them is a company that is likely to break even by this financial year, and the second stock is set to become profitable by the first half of financial year 2024. Those stocks are respectively Tyro, which the SX code is TYR, and ZIP, ZIP. So let's have a look. I just want to remind you, this isn't a financial advice, just as from BG Trading, sharing with you how we apply our strategies to know when to buy and when to sell stocks, how we set up targets, stop losses, how we avoid FOMO, and much more, all in this channel. So if you like the way we trade, please subscribe to the channel and share this video with someone that you believe would be interested. Also like to invite you to become a member of our free Facebook community. We call that Buy, Grow and Sell Strategy for Share Traders. We post a lot of great quality content in this community and a fantastic conversation with our members about potential buying opportunities, stocks that are trading at technically discounted price and are potentially set to rise so we can profit together with those stocks. So, details in the description below. And lastly, I would like to let you know that our end of financial year offer is already on for 12-month and 24-month memberships. So if you want to join VIP BG Trading program for the next 12 months and save a lot, so take a look on this finance offer. It's a really good offer. We only do once a year, and we also offer it for a 24-month membership as well. So if you are existing member, you can always add this offer to your current membership program. So start with the, I have actually done several analyses about Tyro and ZIP. Those two stocks have been incredibly profitable for us, and that's why we normally revisit. We normally like trading the same stock over and over again as we follow the company, we follow the company's history. And it's very important to understand the fundamentals. Our decisions here at BG Trading is not only based on the technical aspects of the stock, especially because sometimes you have really good quality businesses, good quality companies that are sold off and it's still improving its fundamentals, and then all of a sudden what happened is the market buys back the stock right quickly, and that's when people get trapped because sometimes hits the stop loss levels or people get wiped. But if you understand the fundamentals of the company, you can actually minimize your fear on that and maximize your potential profit, even adding up some position when the stock is down. We saw that with a stock like a Megaport a little while ago. We are being highlighted in this channel that Megaport was a company with strong fundamentals, and sooner or later would the stock price would pay off, and that was exactly what happened. The stock fell on our stop loss. We ended up adding up lower than our stop loss levels together with some of VIP members, and then we end up able to close around 35% by memory on that particular trade. And many other companies like Appen as well. Appen was another stock that was a fake breakout. It's hit our stop loss level, but we end up holding. We told the members that we are going to keep holding the stock, and we end up with 33% profit on Appen as well. Although Appen is a lot more risky and not as strong fundamentally as Tyro and ZIP. So Let's start with Tyro first, and then just wanted to let you know as well. Those two stocks are highly affected by the successive hikes of interest rates in the US and here in Australia as well. So what happened now? Well, as we approach the what we call pivot of interest rate cycle, then that's when those two companies should start benefiting best out of that cycle. And a lot of the stocks, uh, despite the fact they have good or bad fundamental value, a lot of those stocks they tend to move as the macroeconomic cycle goes along. So when you talking about different cycles of the market, you know that now we're kind of in a contraction phase, and the contraction phase stocks like materials and the companies that actually not benefiting out of the interest rates hikes tends to underperform. That's exactly what happened to that. But now we're sort of looking into the last bit of this contraction phase and potentially going towards to a recovery phase. And then obviously that's not going to happen until the we're proving to be in recession, which I think we're going to be in recession here in Australia. But remember, the recession comes about 6 to 12 months after there's a lag between the pivot interest rates and the recession itself. However, the market tends to price in what's happening within the next 12 months. So sort of pricing what's going to happen with 12 months from now. And that's exactly why we are positioning ourselves into this type of stocks. Okay. First of all, Tyro. As you know, we made a really good trade last year with Tyro. It was over 100%. Right here, if you want to see. But the reason we actually look into, not because we have some sort of emotional attachment to the stock, we try to separate that, but because this is a company that has been sold off within the last month, and that's a result of couple of few things, especially like mostly because the market has punished this stock as a result of failed takeover by Potentia, which is a company that was looking to take over 100% of the business, which for me, honestly, is a good thing because we still have this business listed as a Tyro, and then a business that is actually improving its earnings year on year. Uh, it is a business that we want to be having exposure to, especially when they are trading, when these stocks are trading at the lower levels of what we call technically discounted price. Okay, so first green tick here is that a revised FY22 guidance has been released in the market recently, and Tyro has upgrading its guidance for the higher end of the initially guidance, which is really good. Obviously, if you so revise the guidance, upgraded guidance, and the stock price is still going down. So, look, over the short term, there's a pressure, but obviously, as I say, I'm a big believer of fundamental value, and the history has proven to me that sooner or later, stock companies that has been improving its earnings consistently, they will have the stock price ultimately affected by those positive results. That's exactly what I'm expecting here with Tyro, which is currently trading at $1, which is technically discounted price for us. So another thing, a lot of people think Tyro is a buy now, pay later. I just want to make sure you understand that It's nothing to do with buy now, pay later. Tyro has a banking license. It's more comparable to Square, for example. Essentially, what they do, they provide FPOS machine for hospitality and retail outlets, and then and they take a commission out of every single transaction. Okay, but they actually have hardware. But most important, which I like, the fact I like Tyros, and I actually use Tyros in some of my previous retail business that I had in the past, is the fact that Tyro allows retailers that use Tyro to have access to immediate funding. So, say for instance, if you have a cafe or you have a retail store, and then you want to borrow $50,000, for example, for expanding, for buying a new machinery, we can have access instant to that fund, and then Tyro will serve a discount on a weekly basis or on a daily basis, a percentage of that of your sales out of that. So it's a very secure way for Tyro to actually have access to the repayments. And as Tyro already knows exactly how healthy are the businesses, it's not just lending money for consumers like Zip does. Tyro actually working on that sense with actually small businesses, and Tyro knows exactly how the business is going before actually allowing them to have access to those funds. So this is, for me, is a competitive advantage for Tyro. Also, Tyro is sort of getting into online payment gateway as well, which is obviously to compete with Stripe and PayPal, which is great because there's a lot of business, a lot of money to be made in that. So essentially, it's been increasing year on year on that. So now, chart formation. Let's take a look on the chart here for Tyro. So I'm actually going to open the platform itself. So Tyro, we go with Tyro first. You go. So currently trading what we call right at the hypothetical support level, which is around the $1. So it's trying to break. There's a fight between buyers and sellers. A lot of people have sold stock as a result of this not successful takeover from Tyro, which was priced around $1.60. Sort of giving or taking. But for me, because the fundamentals are good, again, this deal hasn't changed absolutely anything from any material impact on the business itself. In fact, the business is a lot stronger than it was about 2-3 years ago, where Tyro was trading around $4 or $5, like $4 pretty much. Around between $3 to $4. So now trading at 99 cents. Okay, it's sort of looking at around 99 cents. So I think there would be a bounce around this sort of level. Obviously, it's always important to make any buying decision open the way up. So after we see a green candle on on the upside on Heikin Ash, obviously. So I would be waiting to see a green candle and potentially adding up or buying the stock now. But again, very interesting company, very healthy company in the current environment. And I completely endorse Tyro for those reasons, okay? And allowing, like buying now around $1 or under $1, that will give as per this chart formation, a very good potential of 50% within the next 3 to 6 months. That's my thoughts on that. Now let's move to the second stock, which is ZIP IP. This is obviously a stock that also has been profitable for us, and we've been revealing Zip in the channel many times. Okay, like a few weeks ago, we had about 20% profit on Zip. Unfortunately, we didn't take it. We didn't actually close our position, so we're still holding Zip from 50.5 cents entry that we did. But honestly, I mean, I like Zip at the current moment. So The key things for Zip at the moment is the company goal is to achieve positive cash EBITDA profitability by first half of 2024. So essentially, we are a little bit more than 6 months away from that. But the company has actually proven that is actually reporting towards to their result with the latest update. Which was released in the market on 20th of April 2023, Zip announced the third quarter results with 15% increase on its revenue year on year, even though it has divested a lot from its from its aggressive expansion that we sold throughout 2021 2023, which obviously wasn't sustainable. But the company is now doing exactly what investors would hope for, like growing more sustainably and consistently, but in a slower pace. Like you can't grow, you can increase your revenue over 100% every quarter or every half year, but that's not going to be sustainable. There's no point. And that's what Zip's was doing back in 2019, 2020, and 2021. But now it's back on earth, and we've seen like sustainable numbers popping up from its latest report. So the transaction volume was up by 9%, essentially $2.2 billion, as well as a record transaction number of 20.30 million transactions, which was up 12% year on year. So very compelling growth numbers, like down earth, sustainable. And as a result of the investing, it's one-off costs that we've been seeing in the FY22 that made Zip has come up with huge losses. We likely not to see that from now on in the second half of FY23. So we're hoping for that. Now, the revenue margins for the core business also has improved by 8.3% versus 7.9% in Q3 in FY22. So better revenue margins as well. So even though it is in a high interest rate environment, so that's very important to look at, because a lot of investors are looking at, okay, we're going to short Zip because the margins will be negative, but it's actually improving the margin even though it is in highly high interest rates environment. So recent capital raising has strengthened its balance sheet. Okay, some of you guys might say, like, the company has diluted even further. Look, the level of dilution and but the benefit that it has done into the business, it's remarkable. And I definitely think this the latest capital raising that has helped to strengthen its balance sheet, it was completely positive and in line for what the company aims to achieve in the first half of 2024, which is positive EBITDA. So improved, obviously the recent capital raising will improved forecast. So Zip anticipates an improvement in the second half performance, suggesting potential positive financial result, which is in line to what we've been expecting. So balance sheet is trending, obviously, as I said before. Debt reduction, and that's a big thing here. So the capital raising will be used to reduce the company's outstanding convertible notes by $192 million, which is obviously a positive thing. This reduction in debt can improve the company's financial position and reduce interest expenses. Path to profitability, that's what we're looking at. And obviously the co-founder Peter Gray keeps stating that the liability management exercise will support the company's path to profitability, indicating a strategic approach to achieve financial success. So now let's have a look quickly what's happening with the chart formation here. So I have to log in again. So Zip. So Okay, so this look, the chart formation doesn't look very appealing for the fact that the share price has been, if you know technical analysis, you know that the more it hits the bottom of the channel, the more likely to break out. But I believe it might have a breakout here, but I believe it will be a fake breakout. Okay, the RSI is still looking positive to me, so with diversion. Now, I think if we have a breakout, we'll be soon, very quickly, see buyers step in to buy ZIP under 50 cents. And that's what we'll be looking at every single day of this week. So now, tonight, we will see. We yet to see what Fed's going to do with interest rates. Should the Fed hold interest rates, that will be positive for ZIP and Tyro. That will be positive for ZIP and Tyro, because the more Fed holds interest rates, the more like RBA relieve itself from having to rise interest rates even further. Okay, it's not only a problem with inflation. Unfortunately, if the U.S. dollar is super strong, that becomes a problem for most of the other countries in the world, including Australia. So Australia still needs to hike interest rates. So hopefully Fed holds its interest rates hikes tonight. If that is the case, then that will obviously boost a little bit these sectors. But I think at the current level, ZIP is a buy because it's trading at technically discounted price, and that there is a 50% upside here. So 50% upside will be a selling order about 75 cents. Not saying this is the target. I'm just saying that this is a 3 to 6 months opportunity. Okay, and then obviously provided that we have a positive full year result, which I think we will. Not profitable, but still way better than that last year's full year result. And obviously, if you have improvement and you have confirmation that ZIP will in fact in line to become profitable in the first half of 2024, then we will see sooner or later we'll see the share price reflecting that. Furthermore, and as I said, with Tyro, we also gotta consider the fact that we are close to the pivot of interest rates, and therefore that puts ZIP in a very strategic position, advantage position in as I said before, should the interest rates start pivot, and we might see some decline of interest rates, maybe some stage in 2024, the market will start pricing that up, and most of those stocks that have completely underperformed, completely trashed during the rate cycle, that will start sort of rally again, especially the ones that are reporting well. Okay, so this is my position on ZIP and Tyro. Both of the stocks for me is a buy at the moment. If not a buy, just adding a position. Okay, and I will keep track on that together with our VIP members here. And I hope you enjoy this video. Hope that makes sense. Let us know what you think about it, if you agree, you disagree, and I'll hope to see you in the next video. Have a fantastic week. The whole idea when we designed BG Trading BGS20 strategy was to use only a set number of indicators to make it simple and clear to understand, and to be able to apply our KPIs very easily and very effectively. So you don't have to be any Wall Street smart person to be able to apply those strategies. We really hope this course will help you to make better decisions and make successful trades. See you in the course.